Welcome to the tutorial series provided by Capstone. Today we'll be discussing the basics of a letter of credit and its role in trade finance. So what's a letter of credit? In its basic form, a letter of credit or LC is a document produced by a financial institution delivered to another financial institution that guarantees an importer's payment to an exporter will be received on time and for the correct amount. The importer is required to send payment to the issuing institution, who then transfers funds to the exporter's advising institution or directly to the exporter. In the end, the exporter will receive payment as long as the transportation of goods are compliant to the LC's terms and conditions. Letters of credit are most often used between banks that are in different countries for the purpose of international trade. Now let's discuss trade finance. Trade finance assists with trade cycle funding gaps and allows businesses to obtain goods from a supplier with cash up front. When a supplier abroad is exporting goods to a business partner elsewhere, they will want assurance that the payment will be received in a timely fashion. Instead of a business owner paying for goods right away, the institution handling their import financing will instead produce a letter of credit that will be presented to the supplier or their finance company. As previously mentioned, the letter of credit serves as a guarantee of payment when the conditions of the initial supplier agreement are met. Upon receipt of the goods, payment is made to the supplier or their finance company. This arrangement can be used for a one-time purchase of supplies or on a continuing basis if there will be a lasting business relationship between the importer and the exporter. There are a few key reasons why an LC should be used with trade finance. First, international trade between countries is difficult due to a variety of issues including differing laws, customs, languages, currencies, and so forth. In general, LCs offer a more secure method of payment for both parties involved. Next, the financial institutions handling the transaction offer their expertise and resources for aiding the completion of the transaction. The central benefit of using an LC is that it mitigates the risk of the buyer missing their payments, especially if the seller is unsure of the buyer's credit. Next, we will discuss the trade finance process flow. The first step is parties enter into a sales contract. At the start, a sales contract is established between an importer, also known as a buyer, and an exporter, also known as a seller. The contract includes the following: a description of the goods, the contract amount, the price per unit, the currency, the delivery terms, the time allowed for shipment and presentation of documents, and the method of payment. The importer and exporter agree to use a letter of credit as a method of payment and will stipulate this in the sales contract. Next, the importer applies for a letter of credit from their bank. The issuing bank will then review and process the importer's application. Once approved, the letter of credit must be issued exactly in accordance with the customer's instructions. The issuing bank will then forward the LC to the seller's bank. The seller's bank acts as the advising bank. The importer is then responsible for reimbursing the issuing bank for any drawdowns paid in accordance with the LC. Next, the foreign bank reviews and authenticates the letter of credit. The bank then provides a copy of the LC to the exporter. The exporter then receives the LC and confirms the letter of credit matches the terms and conditions of the sales contract. If the LC does not match the terms and conditions, the exporter has the opportunity to request an amendment to the LC. Once they match, the exporter will then manufacture and assemble the goods for shipment. The exporter will create an invoice and other required documentation. The exporter obtains the bill of lading and any other transport documents from the carrier and prepares all other documents required by the LC. Prior to shipment, the goods are inspected to ensure they are of the desired specs and quality as stipulated in the sales contract. Once the goods pass inspection, an inspection certificate is issued, which then becomes part of the trade documents. The certificate indicates the goods were examined and were found to be as ordered. This prevents incorrect, defective, or sub-quality goods from being sent. The goods are shipped to the importer following all terms and conditions set forth in the LC. Next, the exporter sends a document stipulated in the letter of credit to their bank for examination against the terms of the LC. The foreign bank receives the trade documents from the exporter following the completed shipment of goods. The foreign bank examines the trade documents and ensures they are 100% compliant to the requirements of the LC. Following the foreign bank's review of the trade documents, if they are 100% compliant, the bank then forwards the trade documents over to the issuing bank claiming reimbursement. The issuing bank will review the trade documents and also ensures they are 100% compliant to the requirements of the LC. If all terms have been met, the issuing bank will make payment to the foreign bank. The foreign bank then sends payment over to the exporter. The exporter then makes payment to the issuing bank to receive the trade documents, and it's a closed deal. In summary, an overview of the steps are as follows. Importer and exporter enter into a sales contract. Importer applies for a letter of credit. Issuance of the LC. Foreign bank authenticates and advises the LC. Exporter receives LC and produces trade documents. Inspection of goods prior to shipment. Goods are shipped to the importer. Exporter submits trade documents to their bank. Foreign bank examines documents for compliance. Foreign bank sends trade documents to issuing bank, who also examines trade documents for compliance. If all terms have been met, payment will be dispersed among the parties involved. That concludes the tutorial. If you found this was helpful, please give a like or share and subscribe to our channel.